There's no. Go.
Hello, good evening and welcome to this session today. I'm happy at least we are able to meet today. I am so happy to have, hey, I'm happy to have the likes of Mr. Ebere in the house, Deborah Leo, Donaldson, Kozi, Kiru, Charles. Hey, that's the third house, FCT. And my boss, the country director of our Hot Forex, and he had been with us. We had been in the journey. I think he had been a mentor. He had been a leader. He's a practical trader. He's not just a broker. He's a trader. I know Kingsley Mr. Prince. I may not know your name here. I don't know your name here, but I know you should be here too with us. We have the house full, and we will not take much time. I would immediately hand over to my boss, Mr. Okbe Abiola. I don't know, I'm getting familiar with the pronunciation gradually. He would take us on some basic Forex in educational, we need some knowledge. We need some knowledge. He would give us something at least. I believe you are here with you are here with your pen and paper. You are not only here to listen. You are not only here to watch. I'm so happy having traders. We are of Imarketslive family. We have Imarketslive family, but the Imarketslive family, as the name family entails, is a wide family with different persons. We have different rooms in the kingdom. We have traders and we have network marketers. Automatically, we have experts in network marketing coming to meet with the Forex traders according to Mr. Christopher Terry's vision. In his first interview at whatisIML.com, if you have not been to that site before, please visit whatisIML.com. Check on the interview of the founder. He said he had a vision of traders coming together and be trading and be coming together with network marketers, something that could bring the two industries together. And that is Imarketslive. So we have traders, we have network marketers, and we have traders trained by IML Academy, being the cheapest Forex Academy I've ever seen on earth, and very rich, who are also grown up and now decide to help other new students of the academy to help them trade on their behalf. But what we are promoting as far as Forex in Africa is concerned, we are so much concerned with the knowledge. We are so much concerned with the knowledge. As far as Forex in Africa is concerned, there is no way we would be comfortable without the knowledge. What am I saying? I'm not comfortable giving out trade signals, buy and sell. I'm not comfortable doing that because it causes people to be lazy. We are comfortable with Africans trying to come into the Forex industry. We should not come in lazy. We should come in full. As far as I know, Nigerians, I know most of us here, our IQ level is not bad. We should be able to take the lead in the industry. And how can we get this done? Is to be quick with the knowledge. The cost of having the knowledge is much, but once in a while, philanthropically, we have some events like this that could actually help you address some dark areas you did not know. I know most of you never knew anything about Forex before now. Some of you don't know anything about brokerage services. You don't even know how brokerage services started and how we succeed to even have some brokers in Nigeria. We don't even know how we got to succeed to open accounts with brokerage. We don't even know the differences between STP, ECN, or dealing desk. We don't have anything, about regulations. We are yet, some people don't even know that Forex is taught at school and given certification, that even to be a portfolio manager, you need to be licensed. You don't know that even to be an IB partner, you need to take like 3 exams and be licensed. We did not know all these things. So it's time we get ready to take over the forex industry fully. And as far as I know, forex industry is still virgin in Africa. So it is our position to take the right position and start it well. We have issues with training old traders, but from my experience, 2 weeks with new traders, I feel always accomplished. But old traders, they still go back to their old ways. That is the issue, and that's what we are facing. So please permit me to invite at least amongst us the man that is both in the traders part. He is with us as a trader. He had been a trader. He had been in this other side of the quadrant with us. And now the same person is the other side as a broker, meaning that at least he has an edge over us. He's here and he's the other way around. So he would help us, give us some knowledge, and we will move immediately into the questions and answer session. We will try to keep the session brief. I don't know if Mr. Biola can shorten his presentation to about 15 minutes or depending. I don't want to make it too short because we will move straight to questions and answer session. If you did not send your question yet, please try and send your question so that we will be moderating the questions from here. Some of the questions will be answered by anybody. And as far as I am concerned, I know those that have been in my class here. Any question I can throw to anybody in the house to answer. Anybody here, just get ready. Any question I know you should know, I'll refer to you to answer. And I believe it will be a very fruitful session. Thank you very much. And please let's welcome Mr. Biola on the screen. I believe you'll be able to share his screen with us and take us on some necessary, very important knowledge. Please, apart from listening, apart from it is recorded, please write notes. It's important to write notes. Thank you, sir. Can how do I make? How can should I change here? Make you a host. Hello, sir. Are you there?
Hello. Yes, I can hear you.
Okay, sir.
Okay. Can you hear me?
Yeah, we can hear you, sir.
Okay.
But your video is off.
Okay. Let me bring it up.
Hey, yeah. Welcome, sir.
Good evening. Thank you, Oga. Thank you so much. Good evening, everybody.
Good evening, Mr. Ope.
Well done.
Good evening, Mr. Ope. Wonderful to have you.
Thank you so much. Thank you. Thank you for having me. It is good to have an evening like this where we could actually interact and discuss the beauty, the gains, the prospects, the possibilities of the market. Forex trading is not easy, but it is very simple. It's about understanding all the concepts. It's about risk management. It is about you understanding that forex trading is based on calculated probabilities, and it is not a certainty. What do I mean by that? If you look at a regular aboki by the roadside that is selling dollar to you, what they are trying to do is to take advantage of the fluctuation in price to make money. That is the same thing we also do. We do it on a large scale in terms of trading all the global currencies, in terms of having margin to trade volume. With $1,000, having been able to get leverage from a broker, you can actually do a transaction of $1 million with your $1,000. So the key thing in this market, the key thing to succeed is about understanding risk management. And when I say risk management, The job of a trader is actually to protect his capital, his or her capital in the market. What are we trying to do as a trader? Our job majorly is to actually predict the order flow in the market. If, for instance, we discover that the Nigerian economy is doing well and the Naira is going to, due to certain factors, for instance, it could be that the crude oil price has moved to $70 per barrel, which is positive for Nigeria. If increase in crude oil price is good for Nigeria, then what will be the order flow for Naira? The order flow for Naira will be positive. So if the order flow for Naira is positive, then we should be buying Naira and be selling dollar. So this is what trading is all about. The ability to look at the chart, the ability to analyze the market, the ability to look at both the technical factors and the fundamental factors and be able to determine the next or the possible order flow. When we say order flow, we are talking about demand and supply. If the Nigerian economy is doing so well, what will be the order flow for the Nigerian stock market if the economy is doing well? The order flow for the Nigerian stock market is that a lot of funds will come into that market. That is increase in the demand for the shares of Nigerian companies if the Nigerian economy is doing well. So the order flow is to increase. That is the same thing we do in currency. If we believe that the dollar is doing well, then the order flow for the dollar will be positive. If the European economy is doing well, then the order flow for the euro will be positive and euro will be gaining. So the major job of a trader is to be able to predict the order flow of a particular currency. Now, how do we protect our capital? Number one, a trader must have a strategy to trade the market, because basically we are actually trading strategy. What do I mean by we are trading strategy? You cannot come into the market without having a strategy. You must know what you are looking for. For instance, on the daily time frame, if we see a pin bar at a resistance level, we could be looking at a fall in the price of that particular currency. Let me bring up my chart.
So we can share your screen from this one.
Yes, I'm trying to bring my chart up. Okay. MT4. Okay, I have it on. Can you see it?
No, we cannot see it yet.
You can't see it yet, okay. Let me see if I can actually share my screen from here. Okay. Can you see it now?
Yes, we can see it.
Yes. Wow.
Okay, good. Now, this is Euro GBP. We are looking at the weekly time frame, for instance. If you look at my cursor,
we can see it now.
Okay. If you look at my cursor, we are looking at this is the resistance level around this place, and we've seen that for weeks. If we need to count this candle, let's look 1, 2, 3, 4, 5. For 5 weeks, we've not been able to penetrate this particular level. And we can see a pin bar around that level right now, a pin bar. This is a pin bar. Now, as a trader, if you look at this on the weekly time frame, the weekly time frame is not a short time frame anyway. It's a long time frame. Now, let's move to daily time frame. On the daily time frame, we can also see what is going on right now on the daily time frame. What this means is that we are expecting the Euro GBP to drop from what we are seeing here. We are expecting our anticipation is that the Euro GBP should drop. But we are not going to go into the market right away. We can move to the 1 hour time frame. Let me reduce this. From what we are seeing here, we are expecting that price should drop for Euro GBP based on what we are seeing on the weekly time frame and then to the daily time frame. So what I'm saying now is this: for this kind of position, the expected order flow is for us to sell. We expect supply to increase in the market. That is the expected order flow. The order flow expected in the market for Euro GBP right now is increase in supply of Euro against the pound. So we are looking for opportunity to sell it. That's what we are looking at. So for a trader, when you go into the market, you must be looking for something. There must be something that you're actually looking for. It is the job of a trader to have a trading strategy. Hello? Coming.
Please mute your microphone from there. Don't distract the class. Thank you.
So basically, what we are looking for is the opportunity to actually sell in this market. At every point in time, every trader should have a strategy. Whether you want to be trading retracement, you want to be trading reversals, or you want to trade breakout. If we are looking for opportunity to trade breakout, let me just remove this. I believe you can still see my chart, right?
We are seeing it.
Okay.
Yes, we are seeing it.
Okay. There's another currency I'm looking for here. Okay. Let's look at.
Yes, we are seeing the chart.
Okay. We are looking at. Let me bring this up. Okay. We are looking. This is. Let me bring our plain charts, and we can draw it together. If we look at what we are seeing here right now, this is AUD USD. We are looking at a weekly time frame where price is also moving close to a major resistance level as it is right now. The price has been going up towards a major resistance level on the weekly time frame. From what we can see, the job of a trader in this sense is to look for opportunity to short the currency. If you look at it, for the last 2 days, smart traders have been selling this particular currency because on Tuesday, there was a pin bar. If you look at the chart right now, you will see a pin bar close to a resistance level. This in line with some other fundamental news that came up in the market. AUD has been dropping against the pounds. So for every trader going into, right now we are looking at today, what we can see today is price at a previous resistance level. If you look, let me draw it this way. If you look at this region, price could have issues going below this particular level from the daily time frame. So the job of a trader, in this case now, anybody looking at a price moving to the upside could start looking for entry from this point. You want to start monitoring what the price action formation will be at this particular level. If you look at today's candle, this is daily. I'm looking at the daily time frame right now. From this portion, you are looking for opportunity to see if price will go back up and hit the resistance level. We want to see if price will go back up to touch the main resistance level. Price has moved up with a pin bar. It dropped. The major thing here is the price action. You need to look at the price action in the market. And majorly, there are very good ones that we can actually pay attention to in the market. We can pay attention to pin bars, or what you call the hammer, or the shooting star. You need to pay attention to hammer in the market when you are trading price action. You need to pay attention to inside bars in the market. You need to pay attention to outside bars, or what we call the engulfing. These are price action that we must pay attention to in the market. For every trader going into the market, there must be something you are looking for. You must have your way of trading. Whether you are looking for a reversal, you are looking for a breakout, or you are looking for a retracement. You
I not hearing you again, Mr. Abiola.
You're not hearing me. Can you hear me now?
Yeah, now we are hearing
Yes,
you.
we can hear you.
Okay. So basically, our job as a trader is to look for opportunity where we can actually determine order flow. Are we expecting the order flow to be a decrease, or we're expecting the order flow to be an increase in the market? Then in terms of risk management, I've taught this before. Every trader must make sure they calculate their risk before they go into the market. For instance, if you have $1,000 in your account, before you open a trade, the first thing you need to decide is how much of this money do I want to put to risk on this particular trade. Let's say your risk tolerance is $20 per trade. That would be 2% of your account of $1,000. Now, how do you calculate to determine the lot size? There's something we call position size in the market, position size. That is, for every trade you intend to take, you must know the lot size before you open that trade. You don't just pick any lot size. You can't look at your balance and say, I'm going to trade with 0.1. I'm going to trade with 0.2. No. The first thing you need to do is to determine the lot size, the risk value, which could be $20 from $1,000. That would be 2% of your account. Now, when you determine the value, which is $20, you need to divide this $20 by the number of pips between your entry and your stop loss. Are you with me?
Yes, we can hear you.
Please
Okay.
take that again. Please take that again.
All right. If you are going to make an entry, if you want to open a trade, I said the first thing is you need to calculate your risk value. How much of your capital do you want to risk? From $1,000, we are looking at $20, which should be 2% of your account. Now, you divide the $20 by the number of pips between your entry and your stop loss. Let's say you want to enter your trade at 1.0 and your stop loss is at 1.5. That means you want to risk 50 pips, right?
Yes,
Hello?
we
Yes,
can hear
carry
you.
on.
Yes,
Go
yes,
ahead.
Okay. Now, so what you do is $20 divided by 50 pips. That will give us, let's do it together. I believe you can see my screen. $20 divided by...
We cannot see your screen again.
Okay. My screen.
You choose share screen, then you choose whiteboard.
Can you see now?
Yes,
Okay.
we can see now.
Yes.
So what I'm saying is that we have $20 as the risk value, the amount of money we think we can lose in that trade, and we're still going to be comfortable. That will be $20. Now we want to divide $20 by the number of pips from our entry to stop loss, and we are saying that is 50 pips, entry to stop loss. Okay, from the point of entry to where we want to get out, if the market is not moving in our direction, is 50 pips. So we divide this by 50 pips. This will give us 0.4. What we have means that for every change in price, we are going to be gaining or losing 40 cents. So what we need to do, whatever you get, don't bother yourself about the figure we have on the screen now, 0.4. Your job is to divide $20 by 50 pips. You are going to get 0.4. Then you divide this by 10. Divide it by 10. We have 0.04. That is the lot size to trade with to risk $20 by 50 pips. In other words, whatever is happening in the market, you can only lose $20. Wherever you are, whatever is going on in the market, you know what you can lose in the market. You don't need to panic. You know that you have actually opened a trade, and if the trade is not going in your favor, you are going to lose $20. Now, a lot of traders are finding it difficult to understand this concept of willing to lose money. You should be willing to lose money because losses are part of trading. Losses are part of trading. Why? For every strategy you are trading in the market, you have win rate and you have loss rate. If your win rate is 70% and your loss rate is 30%, it means that From every 10 transactions, you can lose 3 and you can win 7. So when you see the losses, don't think that you have a problem and you must fix that problem. No. You will never be able to design a strategy that will give you 100% accuracy. There is no strategy that can give you 100% accuracy. You must have win rates and loss rates. The idea is for you to have a higher win rate, which could be 70%, while your loss rate is 30%. Your win rate can also be 60%, while your loss rate can be 40%. For every single strategy, there is a loss rate. So when you are losing money, you started trading and maybe you did 4 transactions, you've made money from the 4 transactions, and suddenly you did 2 and you lost money. Then you started thinking that something is wrong with your strategy and you start changing it. You are wasting your time because you will never be able to achieve 100% win rate in the market. You want to do 100 transactions and you want to win all. That could happen once in a while. You can do 20 transactions in a month and you could win everything. You might do 15 transactions, you could win everything. But at a point, you are going to lose money in the market. But the idea is for you to lose what you are willing to, what you are comfortable with. Let me give you the concept of stop loss. You can call your stockbroker to say you want to buy First Bank shares. And they're giving you the price at 10 naira. You bought it at 10 naira. You can leave a standing instruction with your stockbroker to sell these shares if the value should drop to 7 naira 50 kobo. And you want to get out. You don't want to lose more than that. If the value of the shares should drop to 7 naira 50 kobo from 10 naira, you can leave a standing instruction with your stockbroker to sell. That means you want to limit your risk. You don't want to expose all your capital. So in currency trading, you must make sure that you use your stop loss. The situation where you keep trading, accumulating floats without stop loss, you are going to kill your account. Your money will be eroded. So it is important for us as traders to actually use stop loss. And how do we get, how can we do this properly? Is by maintaining position size. The position size is calculated by dividing risk value by, let me give you the formula, risk value divided by risk in pips. Risk value divided by risk in pips divided by $10. Whatever you get is the lot size to trade your position. If from your entry to your stop loss you have 100 pips, then you divide the 20 by 100. If it is 30 pips, you divide the $20, which is the risk value, by risk in pips, which is $30. Then you divide by 10. Whatever you get is the lot size to ensure you do not lose more than $20. Do we understand this?
Yes.
Yes.
We do.
Okay, good.
We are following.
All right, good. Then the next thing you need to do in risk management is to make sure that there's a difference between calculating your stop loss and actually putting your stop loss. The moment you calculate your stop loss, make sure you put the price to stop your transaction if the market is moving against you. It is very, very important. A lot of people think that traders are happy when investors or traders lose money. We are not happy. The reason is this. If you lose your money, that means I've lost a client. Hello? Hello?
Go ahead, please.
Okay. What I'm saying is that
Can hear you, sir.
brokers really want traders to be successful. We want investors to be successful. The idea is very simple. If you continue to lose money, it means at a point you are going to leave the market and I have to go and look for another client. It becomes a problem when a broker starts having a high client turnover. The people who started business with you in January are no longer there in July. Then you are in trouble. So it is in our best interest to make sure that we train traders and investors to understand the market and make money from the market so that we can keep these people. Now, another thing we can look at in risk management is your, when you look at the chart, let's look at my chart now. Let me go back. Can you see my chart?
Not yet.
I are not seeing it.
Okay. You should be able to see it now.
Yeah, it's coming up.
Yes.
Yes, you can see it.
Yes, we can see
Okay.
it now.
I want to explain the terminal. We have balance, we have equity, we have margin, we have free margin, and we have margin level. Let me start from margin level because I think that is the most important one here, margin level. When you open an account with a broker, the broker will tell you that they have a margin call. Mr. Alban, can I continue? You are the
Yes, sir. You
moderator.
can. Yeah, continue, sir. Continue, sir.
Okay.
But then we still
Yeah.
have we still have this 37 45. We can start attending to questions. We still have
Okay.
to
Now,
10 more minutes.
okay. When you look at margin level is simply the major tool for brokers to make sure that you don't lose their money. When you open an account, a broker is actually giving you leverage. They're giving you margin. For instance, if the margin on your account is 1 to 100 and you deposited $1,000, but you open a position of 0.1, which is 10,000. You do not have $10,000 in your account. You only have $1,000. But you have actually opened a position of 0.1. And we all know that 0.1 is 10,000 volume. So where did you get the $10,000? The broker has actually given you margin to be able to trade the market. But when you make money, you keep all the profit. And when you lose money, you are going to lose your money alone. You're not going to lose the broker's money. Now, how is this possible? Let me give you a scenario that will make it clearer to you. If you want to invest in the stock market, because I know most of us we've bought shares in the capital market. If you want to buy, let's say GTB shares from your stockbroker, and you want to buy shares worth 1,000 naira, but you don't have 1,000 naira, you have only 500 naira. Your stockbroker can add another 500, making 1,000 naira. Then they buy the shares for you. That means your broker has given you a leverage of 1 to 2. They've contributed 50%. Now, if you gain on this investment, let's say the value increased from 1,000 naira to 3,000 naira, you can tell the broker to sell it. The broker will remove their 500 naira from the 3,000 and give you 2,500 naira. So you earn all the profit. You only take their 500, which they added from the beginning of the investment. Now, if you are losing money, the broker is not going to lose money as well from the investment. Your own contribution is 500. The broker gave you a margin of 500. Now, if the value of this investment should drop from 1,000 naira to 800 naira, that means you have lost from your own money, not from the broker's money. Your investment in the 800 is now 300. What does this mean? It means that what you actually contributed is 500 naira. And it has dropped to 300 naira. Are you with me?
We are following.
Okay, so it has dropped to 300 naira. What this simply means is that the broker will calculate the margin level. The margin level is calculated by dividing what you have left from your own contribution, which is 300 naira, by the total that you contributed, which is 500. So 300 divided by 500 multiplied by 100 will give us 60%. Right? That will be 60%. 60% of what you contributed is what you have left. So your equity in the investment of 800 now, we started the investment at 1,000 naira because you contributed 500, the broker contributed 500. But now, because the value of GTB shares has dropped, it is now worth 800 naira. And your equity in the 800 naira is 300, which is 60% of what you have contributed. That is the margin level. Your margin level is now 60%. The broker could tell you that, look, if your margin level should drop to 40%, they want you to add more money, which should be $200, 200 naira. They want you to add more money. If you don't add more money and the value of the investment should drop to 20%, which should be 100 naira, the broker can sell that shares to give you 100 naira while they take their 500. Do we understand this?
Yes, we do.
Okay, good. So for a trader, you need to constantly monitor your margin level. Margin level is calculated by dividing your equity by your margin. Equity divided by margin will give you your margin level. So in currency trading, you must not allow your margin level to drop to 50%. With odd Forex and most of the other brokers, we have margin call at 50%. At stop out level at 20%. So if your margin level should drop to 50%, you are expected to add more money to your account or you close some negative positions. If you don't do this and you allow your margin to drop to 20%, the broker will close your positions. It is set automatically. It is not like somebody will go in there and start closing. It is programmed into the application, into the MetaTrader platform. The moment your margin level drops to 20%, all your positions will start closing, starting from the biggest loss on your account. So for a trader, to protect your capital, you must not overtrade. Do not overtrade. When you overtrade, when you have like 20, 30 positions opened on your account without closing anyone, you are going to run down your margin level. When you look at this account, the margin level here is 2,296,950. Can you imagine somebody running this margin level down to 50%, something that is over 2 million? You want to run this down to 50%. If you do that, it means that you don't know how to trade. You are over trading, you are taking too much risk, and you are going to blow your account. So we must ensure that our margin level is intact at all times. These numbers are not just on the screen for the fun of it. Everybody must understand all of these risk parameters. At a point in time, you must ensure that you do not have more than 5 open positions. 5 open positions with maximum accumulated risk of about 10% if you risk 2% per trade. If you risk 1% per trade, you can have 10 positions. But if you risk 2% per trade, you should not have more than 5 positions at a time, because that is 10% of your capital. You can imagine losing, maybe if we are trading small money, maybe if somebody is trading $1,000, they might not see $100 as big money. But if you are trading $10,000, you don't want to lose $1,000 at a go. That is about 400,000 naira. You don't want to lose that. So at every point in time, it is our job as traders to protect our capital. When you protect your capital, you can actually grow it. But when you lose all your capital, you have to go out there and get another money to continue your investments. So it is our job as traders to protect our capital as much as possible. It is from this point that we can begin to grow. The first thing you need to know in trading is to protect your capital. Then after that, you start talking about growth. So it is not profit first, but risk management first. Then the profit will set in. So I think I can stop here and then we can entertain some questions.
Thank you very much, sir. Thank you for the short presentation. And I believe just like Oliver Twist, will be asking for more. Last month we did something like this. And we tried a lot to help, especially new persons to Forex trading, to understand what we are into. And this month again, we started this. By the grace of God, we can make it a weekly program. We have some questions already file sent in. And I remember that I promised that questions will be attended on first come, first serve. Whoever has a question can still send. If we have time, we would attend to them. Let me start reading the questions we had and their sources. The first question we had was from was from Mr. Martins. Let me confirm that. First question we had for this session was from Mr. Martins. Mr. Martins asked us. He said, Namdi, Mr. Mba, okay, MBAH. He is 1 week old in Forex and in Imarketslive generally. Totally a 1 week old trader. And his questions are on harmonic scanner. I'm happy Mr. Bere is here. Mr. Prince Deborah Aliu is here. And Prince, he had actually used one of Mr. Prince's screenshots. Let me see how to share, download and share. One of Mr. Chris' screenshot. I'll share it, maybe it's downloaded. That's Chris screen. Okay. Now the question he asked was one. I think that one would be answered. That one could be answered. I can answer it for sake of time. When using the harmonic scanner, what consideration should we give to the time frames, like the M1, M15, H1, D1? Okay. Number two question: Can we just ignore it and just focus on the trade parameters, or there is more? Is there more to time frames? I think that is from all the image below. What are the time? He's using the MT4 scanner. The MT4 scanner I am unable to download on my. I'm using FX Choice for the MT4 scanner. Mr. Chris, you are here. I was using the platform of want to share my screen. Okay. I was using, let's go, IML harmonic scanner. No. I was using Forex FX Choice platform and Hot Forex demo for the MT4 scanner. But now what we are using is the web scanner, whereby you can use it on your phone, browser, or any browser anywhere. The web scanner still has the scanning for H1, still has the scanning for daily. We have two different scans here. Scan for 15 minutes, scan for H1, H4, and daily. This is how it looks like here. This is New Zealand card D1. Now the time frame, I would answer this way. The time frame matters if you know how to do your analysis. The harmonic scanner first is working on Elliott waves, counting the waves. But now from the IML Academy, our emphasis is not on counting waves. Why are we saying so? We are grooming a total new set of traders. Imagine a 1 week old trader to go to learn Elliott wave. Elliott wave is a course on its own, so you cannot pick it up in 1 week to learn, to know how to count waves, talk of knowing how to draw it. That is the sense of the scanner. So your responsibility is to scan for any of the products you want. And like, which one do you have? Ibere is the master of this one. Ibere is trading this, but I'm looking for the one. Let me tell you how I do it. Any setup that I have it on daily, have it on H4, have it on H1. I value that setup. Like this setup, we have it H1, but we have New Zealand JPY H4, D1, that is daily 4-hour time frame, having the same setup. Me, originally, I like trading daily time frame as my smallest time frame. When I have what I need there, I can play with any other time frame if I want to actually do intraday or scalping. So when I look at the scanner, I see a setup that at least 2 or 3 time frame confirms the setup. I'm not an expert in how do we call it, Elliott wave. I know a little about the Fibonacci, and I know that the scanner we are using here is working based on the principles of Fibonacci, retracement tool, or ratio, and also working with the wave. It is the wave counting that gives this shape. Now, what we are trying to encourage new traders, you cannot learn Elliott wave in 1 week, even in the first 1 month of trading. Rather, it is simpler. Get to daily time frame, depending on your trading strategy, if you have one different. If you don't want, you are trading personality. Let me use that to mention personalities. We have different type of personalities. Intraday traders, swing traders, or position traders. We have scalpers. Swing traders will always do the analysis. A real trader like Mr. Ogbe had just shown us the 2 charts he showed us where he saw his support and resistance and weekly charts. So it's difficult for a trader to go down to 1 hour and start depending on it for analysis. I have seen this on a daily time frame. All I do, I'm new to Forex. I don't know anything about Forex. As a layman, I saw on the scanner 3 time frame, H1, BAT, H4, BAT, daily, BAT. As a layman, I don't need more. All I need is to come, stop loss, entry price. Is it a sell limit or is it an actual sell at current market price? Is it a sell limit? I just go to my MT4, put in my parameters, take profit at any of the 3 I wish. Or you want to go twin trading, we have the power of twin trading as a course in IML Academy, which you know how to take double positions, managing the risk, ensuring that the 3 or 2 positions is the same total, is the same risk you wanted to use. Like 0.04 would give you $20 risk, according to the calculation we just did, in your $1,000 being 2%. You can actually split it by 2 and take 2 positions, having 0.02, 0.02. So the answer to your question, I would answer this way. With the harmonic scanner, it is there to assist you while you are still learning. One day you'll become an expert in counting the waves. But for now, take the parameters. I will not tell you to decide, but I'll suggest to you, ensure that you are trading setups that has confirmations. With your little knowledge of support and resistance, it is very easy to get that done. The second question is I think I've answered both questions from Mr. Namdi. Can we just ignore and just focus on the time more? Leslie, how can we read a structure of, okay, the same thing, sir. Please, in the 1 week old you are, you may not be able to draw harmonics. But since you are already in the IML Academy, I would suggest that you focus on the Academy. Very soon, you are going to arrive at where you can actually draw. We don't learn everything from day one, but gradually, all of us are growing, all of us are expanding, and very soon, you'll be the one drawing the harmonics like Mr. Prince draws and posts. Me, I don't draw harmonics. I've been using softwares to draw harmonics. I tried drawing it myself. I'm not sure I'm perfect. I don't need to be perfect with everything to be successful. So since IML has the harmonic, what do? All I need to do is to just go to IML Academy, harmonicscanner.com, imlharmonicscanner.com. I'll go straight there and IML Academy. I'll just go straight to the IML harmonicscanner.com and take the parameters. Now to answer your question finally, please, this is the IML Academy from basic 1, 2, 3, 4, technical analysis, intermediate 1, 2, advanced, mindset. This is the harmonic course. But you cannot jump from here to here. You are just a week old. Try to follow all the courses one after the other. Immediately after technical analysis, I think you need to come to the harmonics. When you come to the harmonic pattern course, you will be able to learn and understand the patterns and how to draw the patterns. Harmonic pattern, sharp pattern, harmonic 2, 3, Gatly, everything about Bollinger Bands with harmonic scanner, new entry techniques with harmonics 1, how to use the harmonic scanner, entry techniques on harmonics 2. Please, if you want to trade the harmonic scanner, being just 1 out of 7 products, 1 out of 7 products of IML, you need to complete the harmonic pattern course. Where you are not doing that at hand, just visit IML harmonic scanner or in your MT4. Take the parameters and go to your MT4 and place the trade. The simplest thing is any setup that is confirmed by like 2 or 3 different times frame. Please don't play with that setup. They are swing setups. They may not start running immediately. They may take time, but they will go. That's the power of swing trading. That is the first person. The second person asks does. Number 2 is Amuta, Ngozi Amuta. Her question, let me see who answer your question. Okay, how do I determine the candlestick that indicates a change of trend? Mr. Okwe can handle that. The second question is, how do I use or interpret the accelerator oscillator type of indicator? The Bollinger Band is still confusing to me. So if I want to split the question, she asks about indicators like oscillator, and Bollinger Band. Mr. Abiola would help us with that. But Madam, the difference here is that I have never taught anybody how to trade with indicators. We succeeded to overcome indicators trading that Nigerians or Africans were taught initially and were enslaved. We were so enslaved to indicators. We were not told that indicators cannot tell us predict price. We were not told that indicators are following price. Everywhere the price goes. When the price is buying, Bollinger Band, everything will start setting up. I want to tell you what I was taught about Bollinger Band the day I started trading Forex. I paid money and someone taught me that anytime price is at the upper side of the Bollinger, I should start selling. When it touches the downside of the Bollinger, I should start buying. I remember I practiced that and blew an account. So please, indicator trading is not healthy, though for confirmations, but let me allow Mr. Biola to answer your first question, which was how to identify a trend change by candlestick formation.
Okay. To identify. Let me bring my chart.
How do I determine the candlestick that indicates a change of trend? You can still speak on the oscillator for her and the Bollinger Band. Thank you, sir.
Yes. When you talk about being able to identify a turning point in the market, you are talking about reversals.
Yes.
Majorly, reversals could take place at major support levels what we just refer to as key levels. Price could turn back from a resistance level or from a major support level. Now, like I said before, some of the things we look for in the market to actually notice a reversal in the market is the price action signals. We look at price action signals like a pin bar. We look at what we call spinning top. We look at inside bars, because we are looking for rejections at a major resistance or support level. What we are looking for rejections. We want to see that at this particular level, price is finding it difficult to penetrate that level. In most cases, when you are looking at this from the daily time frame, you see that for a few days, price has been consolidating at a support level or at a major resistance level. If price is consolidating at a resistance or support level, and you notice a major candle formation, like a pin bar, or you notice an inside bar is not just a single candle, a small, I don't know if we can all identify an inside bar. In most cases, we're looking for a big candle followed by a small candle. That is an inside bar. A big candle followed by a small candle. But not just a single candle. It could be a series of candles. A big candle will form, then you notice series of candles or a single candle that is smaller to the previous candle. That is an inside bar at a major support or resistance level. When the inside bar is broken, then we are looking for price movement to the other side of the price. Now, you need to draw your resistance and support levels if you want to identify proper reversals in the market. Because there is no way you can actually pinpoint the top or the low of a particular price movement. You cannot pinpoint, nobody can pick the end of price movement. So the best way to do this is to make sure that we draw our key levels. If price is struggling or consolidating at a major support or resistance level, we begin to look for a candle formation. Like I said, a major one that we've seen over time that is reliable is the pin bar. A pin bar is very, very reliable, especially when you see a pin bar on the weekly time frame or on a daily time frame or even on a 4-hour time frame. When you're analyzing the market, we need to know what we should be looking for on these time frames. On the weekly time frame, majorly we don't look for trend. On the weekly time frame, what we look for is the key levels and the candle formations on the weekly time frame. We look for candle formations and key levels on the weekly time frame. On the daily time frame, we look for trend and candle formations. Then on the 4-hour time frame, we don't use the 4-hour time frame.
Please, Mr. Viola, you are too fast on that. You said on the weekly time frame.
On the weekly time frame, we look for key levels and candle formations.
Okay, key levels and candle formations.
And candle formations on the weekly time frame. On the daily time frame, we look for key levels and trend. Hello?
Yeah,
yes, I'm getting you.
Okay, good. So on the daily time frame, you can look for the key levels, the candle formations, and the trend. You don't need to worry yourself about trend on the weekly time frame. Just look for key levels and candle formations to see where price is turning. Then on the daily time frame, I said you look for the trend, the candle formations, and your levels. Most of these levels you mark on the weekly time frame, you will see them on the daily time frame. So you look for trend and candle formations. Then what we do with 4-hour time frame is to trigger our entry. We mark key levels and look for candle formations to trigger entry. Because in most cases, candle formations on 1-hour time frame is not they're not reliable. When you see a pin bar on 1 hour, they are not so reliable. When you see an inside bar on 1-hour time frame, they are not so reliable. So we look for candle formations that can trigger our entry on the 4-hour time frame. if you do what we call it, when we talk about, okay, now let me talk about the oscillation. Majorly, like Mr. Alban said, you don't follow indicators to trade. But I will talk about Bollinger Band. Bollinger Band has 20 simple moving average. It has the line in between the moving in between the Bollinger Band extreme bands is the 20 simple moving average. What is the moving average? A moving average is the mean, the average of a particular period. If let's say we are looking at 20-day moving average, we want to look at what should be the average price within the last 20 days. What should be the average price? So price is moving. The moving average is actually showing us what the mean price is, the average price is in the market. So if price is moving away from the mean, from the average price, you want to wait for price to come back to the average price. We call it the value area.
Mr. Biola, you don't scatter our head. Oh, hey,
how?
take them easy. You said moving average.
Yes.
Is the mean or the average of at a particular time, right? For example,
Yes.
you are using 20 days.
We are using 20 days. For instance, within the last 20 days, what should the price be for pounds USD? Now, the moving average is showing you what the average price should be. Price could be above the average price, or price could be below the average price. Now, in a trending situation, if price is coming back around average price, in an uptrend, you want price to come back to average price before you are buying. We call it value area. That is where you are buying at a reasonable.
Mr. Biola, do you have a diagram to show us this?
Let me share my screen.
Thank you.
Divorce. Wow.
Oh, guys, are you feeling me? My head on the scatter.
The guy wants to leave office, so he's still in office.
Okay. Let me pick my screen now. Okay. Can we see this?
Yes, we can see it now.
Good. Now, if you look at this upward movement, for a trader that is not knowledgeable about trading, they could be buying around these areas. Okay, because the price is going up, they want to jump in. But we are looking at, I have about 3 moving averages here. We have the 30 days moving average, we have the 50 days moving average, we have the 100 days moving average, for instance. Let's pick the 50 or the 30. What the average trader is looking for in the market, if you want to buy, because if you look at this resistance, I have a resistance, the red line is the resistance level. We are looking at resistance, hoping that price should come back to retest that level before going up. Now, in this scenario, we're looking at price right now is evaluated. Price has come back to the moving averages. That is, you want to buy at a lower price, at what you consider as average price. For instance, you want to buy a property. A property you are buying at 20 million naira. You don't want to buy at a very high price. You are buying at overvalued price, because in future, how much are you going to sell it? At the end of the day, people will come around and say, oh, you bought it very high when you bought it. That's why you want to sell it too high. So you want to buy a property or an asset at an average price. You don't want to buy too high. So in an uptrend, we wait for price to come down to the value area, the average price. That's what we use moving average to do. Moving average will tell us if price is above the moving average, we know that, okay, price is above average price right now. Price, so at a point, price will still come back to the average price. That is what we are seeing here. If you look at this chart, price has been going up. Now it has come down to the value area where we can start considering buying again if our bias is still to the upside. If the bias for this particular currency, this is Euro USD. If the bias is still to the upside, this is the area where we want to look for opportunity to buy this particular currency. We don't want to buy too high. That is what I'm explaining about moving average. Do we understand now?
Yes.
So in the do you understand now?
They are trying to, just that this one is highly technical. I must
No,
tell
it's
you.
a question asked by somebody and it has been answered.
It's not technical.
I understand.
I'm explaining the moving average in the Bollinger Band. The job of that moving average is to wait for price to go above the mean price, or for price to come back to the mean price for you to buy. We call it value area. Traders look for value areas to buy. They want to buy at a reasonable price in the market. That is the essence of the moving average in the Bollinger Band. So if you study further, you will see the reason why a lot of traders don't use indicators much. But moving averages and Bollinger Band is very common because of the moving average in the Bollinger Band. That is what I'm trying to explain here. But mostly, price action is your best bet. If you are looking for what to tell you where price is going, price action, the candle formations will always tell you what is going on in the market.
Thank you very much, sir. So, Madam, at least you've heard the response on Bollinger Band, and Bollinger Band has 20-day moving average at the middle. And most importantly, as I said, we don't train, there's none of our classes we teach people how to use any indicator. Our highest indicator is support and resistance, which we use our eye. You can see it as it is drawn on the lines. I don't remember teaching about Bollinger Bands.
Like this? Something so simple.
Very simple. In fact, our aim is to make trading very simple. If we make it simple, better for us. So I don't encourage. And the next question was from Mr. Donaldson again. And I believe that question you just answered, Mr. Abiola just answered. It has answered that question too, because the question is similar, asking about the same candlesticks. And sorry, sir, I know he wants to leave office. He has been in the office since morning and wants to leave by now. I want to check if there's any other question that will need your attention, sir. That's what I'm looking at now. Notice putting stop loss, that is my stop. The question on stop loss had been answered from the training session. The question on risk management had been answered. Risk management, how to calculate, had already been answered by Mr. Abiola. Breakout. How can I avoid false breakout when trading support and resistance? Okay, it's very simple. Wait for a breakout and retest. Wait for a breakout and retest. Don't jump into trade after a breakout. Any support or resistance broken shall always be retested. There's no way it will not retest. I think everything asked here had already been answered. Mr. Dayo, I can see you. Okay. Mr. Dayo, good. My question is simple. This question is very simple. When are you coming to have at least a session with us in Lagos? That's a simple question. I think Mr. Ebere can answer that one.
Lagos?
Yes, sir. It's asking, the question is when I will come to Lagos.
Is that question for me?
No, it's simple to answer. Mr. Ebere will answer that one.
When I'm going to...
When will I be in Lagos?
Okay.
Please, what's the differences between major support and resistance and minor support and resistance? Please, sir, this one is a good question for you to answer.
Major resistance and support levels are the long term. So let me show you. Let me just put on my chart. Let me look for one. Okay. Let's see. Okay. Playing charts. Looking for some clearer.
There's a question from Deborah Dixon.
Okay. Okay. If you look at this, let me draw this, and you compare it with this other level here, being taken out. Let me bring this up. When you look at my chart, you can see that you have lines, vertical lines. The lines are looking at different period. For this year alone, if you are looking at this, this is weekly time frame. This particular level here, where I have the cursor right now, that is the lowest level we have actually reached for 2017. And the price is at that level right now. That is a major level when you are trading. The level you've not taken out this year is going to be a major level. You're not going to break it easily. What we are seeing on the daily time frame, that level is being taken out. This is a major level. It's been taken out if you look at the daily time frame. But the other red line above is not a major level. Is the level is one of the levels we have established this particular month. So you are not going to call this one. Normally we have short-term levels and long-term levels. The level we are breaking right now is a long-term level. That is the level, that is USD CAD. We are taking out that level from what we are seeing here. It's a level where we have to be patient a little bit because it's a major low. Now the level above is a short-term level because it does not carry the same strength as the level we are breaking right now. So in this case, if I'm going to draw another level here, you could draw this level, all right? And there's another level here. All these levels are short-term levels because you can't even see 2-3 levels coming together. Okay? A situation where you have a level like this one, these two here, this is a major level. This level has been tested twice. This level has not been tested. The one here has not been tested, where my cursor is, has not been tested. It was a retracement that we established this month. It's a short-term level. Compared to the level we are taking out right now, this is a major level in the market. So you have to pick 2-3 levels before you can see it's a major level. A single level that just been created is not a major level. When you want to identify a major level, it must be a price has tested twice or 3 times or more in the market. That's a major level. A level created in a single retracement or a reversal is not a major level.
Good, sir. Okay, please zoom in the chat again. I can use it to answer the last question that was asked. Just zoom in so you can see a little bigger.
Are you seeing?
Okay. Yeah. The question about how to avoid false breakout, which I answered. You can see the last breakout there where the current price is. The candle there had broken out. For technical traders, they will have patience. This business is related to patience. In fact, it is a system of transfer of wealth from impatient investors to patient investors.
Yes.
So this breakout candle now, you have to be patient to wait and look for a candlestick formation under that former support becoming a new resistance. And when we now have a bearish setup, that's when you can actually proceed with selling. As Mr. Biola said, at that point, everybody are out waiting, watching, waiting for the next line of action. So that's how to avoid false breakout.
A lot of people are monitoring this as it is right now, looking for...
Hello?
Yes.
Hello?
Yes.
If I understand your explanation well, at this breakout now, you said when you're having a bigger candle and you're having a smaller candle formation, right?
No.
Now,
we're talking about inside bar. You are talking about inside bar. Okay.
Okay. In this case now, the second candle has not closed.
The one, right? The candle for today.
The bullish candle.
Yes,
the bullish
candle.
Yes.
It has not closed.
Yes.
So are we going to wait until this candle close or this time frame?
No, if you are looking for inside bar, this particular candle you are looking at, it's not you don't want to trade this one. Are you looking for a bullish inside bar or a bearish inside bar?
At this case now, I am looking for a bullish inside bar.
A bullish inside bar.
Yes.
If you are looking for a bullish inside bar, you need to take note of the fact that this level has been broken. Okay. If we're going to be looking for anything around this place, we are not likely to be looking for a reversal. You are looking for a reversal now. If you are talking about bullish, because what we are looking for is retracement, not reversal.
Retracement.
Yes.
We are looking for retracement, not reversal.
Why?
I will tell you one thing. Because on the daily time frame, we can see that a bearish candle actually closed below that level.
Okay.
You can see that is the candle for yesterday. The candle closed below that level. Okay, this can be considered a breakout, but this is why patience is key. When you go to the weekly time frame, can you see what we are seeing on the weekly time frame?
The weekly time frame.
Yes, I want to break some of the lines. This is the weekly time frame. Can you see that from the weekly time frame, it appears that we are looking at a doji on the weekly time frame around that same support level.
Yes.
Indecision candle.
That is indecision. The indecision is taking place because a lot of people are concerned about what is going to happen at that level, whether we are going to break further down or price will go back up. Now, the best way to look at this, like we said, is wait for this particular candle to close. We are looking at today's candle right now. Patience is key around here. I said it when I analyzed this earlier. You have to wait for this candle to close. Then we are going to see what the reaction will be by tomorrow. That will be the next candle. Are you with me, madam?
Yes, I'm with you.
So we need to wait for this candle to close, the candle for today to close. Then by tomorrow, we are going to see the reaction in the market. This is what the 4-hour time frame is showing us. This is what the 4-hour time frame is showing us. On the 4-hour time frame, we can say that, okay, there is the level after we broke that level, the high of Monday, today is Wednesday. The high of Monday was tested yesterday, and that same high has been tested today. Can we all see this?
Yes.
So what we need to do is to exercise patience in this case. We need to exercise patience around this level because the price is still within that resistance, within that support level. Even though a daily candle is showing that the level was broken, but I tell you that we are still too close to that level to start selling immediately. We need to wait for today's candle to close. And after that, then we can look for maybe a trigger pattern on the 4-hour time frame.
Thank you very much, sir. That is very explanatory. The secret is waiting at major key levels. The question on key levels have been answered. Throughout the presentations, I think this question you would be good at it. Sorry, I know your time is taken. Sorry, we are your children at least. There's a question I know you can answer well. The question is thus. Please, can you throw more light about what to watch out for while watching Bloomberg TV?
Okay.
I think that's a very straightforward question. Talking about the fundamentals now. Thank you, sir.
About Bloomberg TV.
If a trader is watching Bloomberg TV, for instance, what should the person look out for?
A trader can only be paying attention to Bloomberg TV during major news release. If we are waiting for the non-farm payroll, the NFP, we are waiting for maybe a press conference by the Federal Reserve chairman, or we are waiting for European Central Bank president to speak about the market. That is when we pay attention to Bloomberg. Or you want to go to their website and read about what's going on in the currency market. We don't listen to Bloomberg by waiting for analysts to come and tell us what to do. Because, trust me, you don't want to follow what these guys are saying. Most of the time, the information you are getting from Bloomberg is late, apart from the major news release, which is coming out to everybody at the same time. But most of the analysis... Hello?
Yes, sir, we are hearing you.
Go ahead.
Yes, we can hear you.
Most of the analysis on the Bloomberg TV are from different speakers, from different asset management firms, and you cannot simply follow what they are saying, because most of the information being released to the market from these analysts are already expired information. Traders anticipate, and we also react quickly, but we don't wait too long before we react to what the market is actually doing. So we can listen to Bloomberg. For instance, this week we are expecting non-farm payroll. That will be on Friday.
Yes.
I think.
Yes, sir.
Mr. Alban, that will be on Friday.
Yes, sir. Friday, non-farm.
Hello?
Yes, we are hearing. Non-farm is Friday.
Mr.
Hello,
Alban,
can
you still there?
Okay.
That's
So
right.
on Friday, we are going to be monitoring the NFP. So you can actually listen to Bloomberg for that. But we don't listen to Bloomberg for us to... We don't listen to take trading decisions. No, from Bloomberg. Bloomberg can give you idea of what's going on in the financial market all over the world, around the world. If China is in crisis, China is going to increase interest rates. The inflation in America is dropping. The inflation in Japan is increasing. You can learn all of this by listening to these TV stations. Apart from Bloomberg, you can also listen to CNBC News, CNBC Africa. They do European sessions and all of that. But majorly, we just monitor the news release. We don't listen to analysts to take trading decisions. It doesn't work that way.
Okay, sir. Thank you very much, sir.
Thank you.
Okay, yeah, the question came from her. Ms. Deborah, Samuel was the question here. What is a simple sign you see in the chart that could give you 90% assurance of a trend reversal, trend continuity, and ranging market movement? I think these have been answered through the other questions. Resistance, support, 90% assurance. Yay. So do we have 90% assurance?
90%.
There is no certainty in trading. That is why we use stop loss.
Yes,
that's why we use stop loss. There is no certainty in trading. What a reversal pattern that you saw today could give you money, and then another one tomorrow could go against you, depending on the volume and what the participants are actually doing in the market. And at every point in time, the volume in the market today, even though you are looking at the same pattern, the volume in the market today might not be the same volume in the market tomorrow. And in the market, we are dealing with supply and demand every time. You could see a valid reversal pattern and you want to take it. But a single order from anywhere in the world could change the power of supply and demand in the market, and things could go the other way. So there is nothing like 90% assurance. Like I said, if you are able to achieve 60% win rate in the market with a risk to reward ratio of 1 to 2 or 1 to 5, you will be fine in the market. You will be fine.
Okay, sir. Thank you very much. I think the questions so far written have been answered. Some questions were answered from other questions, mostly about support, resistance, change of trend. I appreciate your time in the office till now just to attend to us. Would not like to take you beyond that. I can actually continue and I can actually take other questions. Most other questions are related to IML products. I don't any other question that would come. I believe we still have good hands here. We'll be able to handle them. There are no more bigger questions like I expected. I expected big questions about the industry, but I can see people are just making it simple.
Any question about brokerage?
I've not seen any question about brokerage.
Any
I expected question about brokerage.
Okay.
I've not seen it, and nobody knows. You know, they don't. Most people don't even know.
Can I ask one question? Can I ask Mr. Okpe one question, please?
One question. Okay, madam.
Yes. Mr. Okpe, what is the benefit of ECN?
Okay. Let me explain. I like to make reference to the local market so that everybody will understand. If you want to buy First Bank shares in the market, in the stock market, your stockbroker will buy it for you at the same price they are selling to everybody on the floor of the Nigerian Stock Exchange. If First Bank shares is 15 naira, you buy it for 15 naira and the broker will charge you commission. So which means that you are getting the market price, the raw spread in the market. The same thing with Forex Trading. If you get ECN account, on our platform, the ECN account is the zero spread account. It means that you are getting the interbank spread, the interbank price for that particular currency pair, and you only pay commission to the broker. So the price is not marked up by the broker. We don't add anything to that. So that is the ECN. And ECN simply means electronic communication network, where the price comes from, but mostly people still call it ECN. In today's market, it is no longer it is no longer ECN, it is more of general STP, because the price is coming from the interbank market, from the main liquidity source of these big banks, HSBC, Barclays Bank, and the rest of them. So what they are offering the asset managers is what they are offering the retail traders in price. Now, for the other one, you don't pay commission for the other price. Let me give an example of that. You want to buy First Bank shares at 10 naira. Instead of your broker charging you commission, they are adding maybe 50 kobo to the price, and they are now selling the shares to you at 10 naira, 50 kobo, but you don't pay any commission. So that is the spread only account. The ACN account is purely raw price from the market. The price that all the big banks, all the big asset managers are trading in, the liquidity price itself. So it is for those who don't want markup. They just want to buy at the interbank price, but pay commission to the broker. At the end of the day, it is a bit cheaper than the premium or the micro account. When you are trading on the zero spread account, it's a little bit cheaper than the premium or micro account. But some traders don't want to pay commission. They just want to pay the spread and walk away.
It's okay. Then does it have any way to improve your trading? Does it improve your trading in any way?
What I will say is this. Based on personal experience, as a trader myself, I love to trade on the premium account. I don't like paying commission. I just want to pay the spread and walk away. If you are a scalper and you are taking maybe 1 pip, 2 pip, I don't think it should be on a commission account. I think spread only account is better for you. So it does not improve your profitability in any way. But just for those who don't like the markup spread, they just want to pay what the big banks are offering them directly. That's why we offer it.
Thank you very much.
Thank you very much, sir.
Thank you
for your day.
Can I ask a quick question, sir?
Still to Mr. Ogbe?
Yes, to Mr. Okpe, sir.
Okay.
Okay, I have noticed that during the course of trading, the spread that's given differs from currency pair to currency pair. There are some currency pairs that when you take their trades, the spread there is very small. There are some currency pairs that when you take the trades, the spread is so big. First and most, I want him to tell us why and which currency pairs really have this very marginal spreads and which one has these bigger spreads, number one. Number two, for traders, what is the significance of PAM account to some of us traders, and can we use PAM account very profitably? You know, it's not all of us. Many of us are new, quite true. We are trading successfully, yes, but we still do not understand fully the concept of the PAM account and how we can use them successfully.
Okay. On the spread is determined by how liquid a currency pair is. For instance, the most liquid currency pair in the world is the Euro USD. When you look at the volume of transactions going on between America and Europe, you will know that okay, let me give you explain it this way. I want to buy $100 from an aboki, and it's telling me that it's going to charge me maybe $365. That okay, you want to buy $100 as $365 because I'm not buying much. But if I tell him, look, I want to buy $100,000, it will tell me that okay, I'll give it to you at $364.50 kobo. So the increase in volume of this currency, of this particular currency, is what actually brings the spread. You know, the spread is the difference between the buying and the selling price. So because of the volume, you have a very low spread. The lowest spread is seen on Euro USD, followed by USD JPY, Pounds USD. Then you talk about AUD USD, USD CAD, all the eight major pairs. This is where you find the lowest of spread. But when you look at currencies like Euro AUD, Euro New Zealand, what is the volume of transactions between the European economy and the New Zealand economy? Of course, the spread will be higher. When you look at Euro AUD, what is the volume of transaction between European economy and the Australian economy? The same thing with Pounds JPY. What is the volume of business between England, the Britain, and Japan? So the volume of business is what actually brings the spread, which is the cost. The cost we pay to the brokers. The volume is what actually, because what we get from the interbank market is marked up. For instance, let's say we are getting Euro, let's say we mark up all our spread with 1 pip as a broker. For instance, we mark up all our spread up with 1 pip. And for Euro USD, we got 0.1. And we mark it up with 1 pip. That will give our traders 1.1. But if we go to GPP AUD, for instance, if we are getting it from the interbank market at 0.5, and we now add the same 1 pip, that will give you 1.5. So the volume and the interbank market both actually have effect on the spread you get in the market. So the volume is the number one thing that actually dictates the volume of the spread of these currency pairs. So the best, if you are looking for low spread, stay with the 8 majors: Euro USD, USD JPY, Pounds USD, AUD USD, New Zealand USD, USD Swiss franc, and I think the last one should be USD CAD. So we have about 8 majors that you can trade with low spread. Then there is a tool that you can place on your MT4 to always see the spread. Mr. Alban, I don't know if you have something like that. I have it on my chart. If you look at my chart, you will see that for every currency pair that I'm looking at, I can see what the spread is.
Yes, axe
there
line.
Are tools that are. Hello?
The axe line or a software that shows the spread.
These are just these are indicators. I know you also use these indicators.
Can share your screen.
Let me show you. Okay, let me share my screen. I'm bringing it up. Let's see. Okay. Can you see my screen?
Yes, we can see your screen now.
Okay, look at the cursor now. If you look at my cursor, you can see Euro USD. We are looking at Euro USD, and the spread is moving between 1.2, 1.6. This is it. Can you see 1.6?
Yes, I can see 1.6.
It is 1.2 now.
Yes, 1.2.
Okay, we can move to, let's look for USD/JPY. USD/JPY is also 1.2. Can you see it?
Yes, 1.2, sir.
Just it's moving 1.6, 1.7. Okay, 1. So that is a USD/JPY.
Can I see? Do you have GJ there?
Yes, I have. I have it. This is GJ. GJ is 3.1, 3.4. Can you see it?
That's very high.
Yes.
Wow.
Because it is pounds JPY. If you go to some other brokers, you will even see 5 point something. You can even 6 point something. So this is, like I said, the volume is what actually dictates the spread you get in the market. The volume between these two economies, pounds and JPY, the volume is low. The volume is low.
There's a question here. How do we get the indicator?
The indicator. Okay, I can send it to you, Mr. Alban, then you can share it with everybody.
Okay, sir. Thank you, sir. Thank you, sir.
I think the second question is about PAM.
Yeah, PAM. Knowledge about PAM.
Have I answered the first question?
Yes, you've answered.
Yes, you have answered the first question.
Yes, you have done justice. You have done justice to the question on spread, sir.
Okay. Now, on the issue
it's just that Mrs. Aliu is not happy with GBP/JPY.
Because that's my favorite pair.
What you can do is this. I want to show you something quickly. Let me show you something quickly from the website.
Okay, go ahead.
Tools. I'm looking at looking for traders board. Let me look at traders board.
You have to end the former sharing and share again.
Okay. Let me just open it. I will share it.
Okay.
I'm trying to show you the spread. You can compare the spread from different brokers and see what it is like. What we have on our platform, any broker can also do the same thing and place it on their website, and you will see it. Okay, I think it's not. I can't find it right now, but I can send the link to you, Mr. Alban, so that you show it to them. You can look at spread of different brokers, and on this particular GBP/JPY, look at what every broker is offering. GBP/JPY is not a currency pair that has so much volume, so the spread will be at that level. Now, on the issue of PAM, we have PAM managers and we have PAM investors account, PAM managers account and PAM investors account. PAM managers account is for those who know how to trade and they want to trade for other people. When you open a PAM managers account, what you are trying to do is to have other investors put money with you so that you can trade for them and get a cut from their profits. All of this is done for you automatically when you open a PAM managers account. All you have to do is just to focus on trading. The PAM means percentage allocation management module. The module is set up in a way that at the end of every month, it will take out your performance fee or your success fee for you. If you are successful as a PAM manager, you are trading for other people. You are trading the pool for other people to make money. What you are trying to do is to use your own skill. You have the skill, and you want to use your skill to make more money. So you are trading for a lot of people, and you are getting a cut of the profit you are making for them. It could be 20%. You have the right to set it up. You could set it up as 20%, as 30%, whatever you feel comfortable with, or you feel that you can sell, you can market. It's what you set up to make money for yourself. Then for PAM investors, if you identify a PAM manager that is doing well, you can actually invest under this PAM manager. The things you need to look for when you're analyzing a PAM performance is to look at the float on the account. You need to look at the float on that account. It is the number one thing you need to look at. A lot of people just go to look for the profit. It is not the way to go. You have to look at the float. If this particular trader is accumulating float, then you need to run away because it's going to lose your money at the end of the day. So look for managers that are doing well, but they are not accumulating float, which means that they're actually trading properly. They are setting stop loss, closing negative positions with a smaller risk, and then they leave the major ones that are profitable to run, and they give you profit at the end of the month. So you look at the equity, how much is this manager trading in the market? What is the volume? What is the maximum drawdown? You need to look at the maximum drawdown as well. Any drawdown that is above 30-40%, please don't put your money. If the maximum drawdown is above 40%, that means that trader is risky. And if this trader is accumulating floats, don't put your money. You have to look at these two things before you start looking at the profits. Don't just focus on, you see somebody making 200%, 100%, but please look at the floats. If the trader is accumulating floats, it is risky. That means he's an aggressive trader and he can lose all your money.
Thank you
Another
very
thing I
much,
want to find out. Let me ask you one more question.
So
If
Ben
you are
wants
a
to
farm
leave
manager,
office.
hey, yeah, sorry, Mr.
Okay.
Okpe.
Okay. Let me just answer this one so that I can go.
Okay, Mr. Okpe, if
Yes.
you are a farm manager, you are managing account for investors. For
Okay.
example, you set like 20% monthly. Does it automatically leave the investor's account?
At the end of the month, if at the end of the month you finish the month in profit, your 20% success or performance fee is deducted automatically and remitted into your own account. This is something that the investors have agreed to when they open their Palm Investors account under you.
Okay. Then when it leaves your account, does it go to your wallet or goes to your trading account?
You are going to have a dedicated account to receive your performance fee. So the money goes into your account. Then from your account, you can move it to the wallet.
Thank you very much, sir. Thank you.
Okay, thank you very much, Mr. Biola. I'll attend to other questions as was sent in. Thank you for coming in today. Our next schedule, I will inform you about it. Now, let me take a question from Mr. David Z. How does one know when an open trade is going to close? And also, can all trades be set to market execution? Or the market determines that? Okay, I think that is a question. How do I put it? The market does not determine what makes you to open a trade. What is your decide? What do you decide? What is your trading system? How did you decide to buy? What makes you to want to sell? Is it from your personal analysis? And as far as analysis and from our training, from any level of training, you can see that any successful trader is trading the support and resistance. I want to let you know one psychology about trading. As far as trading is concerned, we have two sides of the sentiment, the bulls and the bears always fighting. There's no time these two had ever stopped fighting. No break. Bulls and bears always fight throughout. Number two, we now have the institutional traders trading against the retail traders. We are all retail traders. All of us put together are retail traders. The institutional traders are the opposite of us. And you know one thing that baffles me? For one to be an institutional trader or a staff working for an institution that trades, the first training he must go through, apart from his own skills of trading, that the employee or the employer now accreditates and accept that this person should be employed to trade in their firm, trading for an institutional trader as a staff, like a bank employing a trader to trade. The first thing they will now teach you is to teach you how the retail traders trade. The main thing they study is to study our own psychology. How do retail traders trade? If price is at this and it's like this, retail traders will be buying. It's always like that. That's how retail traders buy. I know some of you, if you go to Forex Factory, there are so many indicators, there are so many sites, you can actually see the number of traders buying or a number of traders selling a given product. You see that these guys are trying to read our mentality. They see how to stay out of the market that was selling just because everybody is selling. When the demand is higher than the supply, the price increases. All the institutional traders will do is to stay out, take their profit, and leave. By that time, we, the retail traders, have started taking profit, or if you allow it, it will come back and hit your stop loss. When they now know that we are out, they will enter again. At times, the speed, the movement will take because of the volume pumped in by institutional traders. You may not meet up again. That's why swing traders stay longer in this business, because all these things happen. Now, you as a retail trader, your duty is to study and know how the institutional traders are trading. And if you know how they trade, please try and also trade alongside with them. Never you go against the institutional traders. How do they trade? As I'm speaking to you, even JP Morgan's, George Soros, whoever you mentioned, all of them go to, as the question on Bloomberg TV, you see those analysts come to talk, they are discussing support and resistance. Nobody discusses Bollinger Band or moving average nor anything. They are discussing support resistance. The next thing you hear them discuss would be the candlesticks formations. The next thing you hear a trader discuss could actually be formations. They call it price action, support resistance. They are looking at those ones. They don't look at just 1 hour. They don't even know this. I don't think they know this 1 hour time frame. They don't understand that. So now to answer your question straight, what makes you to buy? Are you buying at a price higher than the current price? That is buy stop. Are you buying at a price lower than the current market price? That is sell stop. It is not the market that decides, it's you. You want to enter immediately. You don't want to wait as under pending order. That is current market price. It is decided by you, the trader, not the market, not the MT4. Another question I had here, I'm trying to rush over, is IML TV. Is IML TV for only IML? Let me check the question. Is IML
Mr.
TV?
Alban.
Yes, sir. Yes, ma'am. Yes? Between support and resistance? I'm not hearing you again. Is IML TV for only IML members? I'm still looking for that question. Yes, IML TV is for IML members. The IML Academy I showed you is for subscribers to IML services. We now spoke with Mr. Biola, who came in from the brokerage firm, which we are trading with. Why do we choose that broker? Because of the spread, because of the platform, what we know and what we see there. Now, experience on different platforms, not one, from different platforms. Now, IML enlisted Hot Forex, part of the brokers, and in Nigeria, we now have it as amongst the list. Amongst in the list, the only broker we have that at least we can speak. When he sends the link, we can compare. We can compare the spread. You'll see what we are talking about now. Now, what I'm saying here is this: IML is a service provider, and among the service providers I know in Forex market, none is as cheap as IML. None of the service providers I know even signal providers that sends SMS, buy and sell, even those that have app, I don't know, those that even call it Forex educational platform, none of them is cheap. Forex courses, some are $1,000 just for one course, just one day. So that is how expensive it has been. So IML comes in with 7 different products put together and giving it all out to us, almost free. I call it free because it is too cheap. So IML is just a service provider, like someone flying on some other person's wing. You are just coming into Forex 1 week old. You don't have all it takes. You don't understand these things. All you do is to come to IML Academy and start from the basics to learn. Take note, this is just one product. While you are learning, we have the second product, the TV. At the TV, we have live sessions, live educational sessions, live trading sessions. Let me show you the TV. Let me show you the TV. The IML TV. Let me show you the TV. Share screen, share screen, share screen. Okay. Okay. Harmonic scanner. This should be the TV. Okay, this is a TV. This is the channel guide. Sunday, Forex Basics class, 8 p.m. Eastern Time. We are 5 hours ahead. I think that should be what time here? 2 a.m. or 1 a.m. Eastern Time, Forex Basics. Just add 5 hours to this. So 8 p.m., 9, 10, 11, 12, 1 p.m., 1 a.m. on Monday. We have Forex Basics class. Then Monday by 5 a.m. we have Trade House at the TV.
Sorry, I can't see the screen.
You cannot see? Let me share.
I don't know if others are having the issue.
Let me share again. Okay, can you see it now? Can you see it now? Can someone see my screen? Any response?
Cannot see it. We can't see. We can't see it.
Hey.
No, sir. What? Maybe I would say.
Yes. I'm listening.
No, we can't see, sir.
Okay. A surprise. Nobody is seeing my screen. I've stopped the sharing and I share it again. Still not showing.
Still not showing.
Okay, Mr. Berry, can you share your screen? We have the TV for Monday, the schedule is there. We have Tuesday, London session. We have New York trading session. And in between these sessions, all these sessions are educational. While you learn from the academy, you can actually come and practice. You can actually join the live classes again on TV and also take trades alongside. While we also have the harmonic pattern scanner as one of the products, all this is to help you as a novice, new to Forex, to take decisions very easily. Can you go over stops and limits? Sell stop, buy stop. I will use one. Let me use buying. If you are buying stop, it means you are buying at a price higher than the current price. If you are buying at a price lower than the current price, you are now buying limits. That is limit order. For a sell, it's either you sell at the current price or you sell at a price higher than the current price, which is sell limit. If you want to sell at a price lower than the current price, that is sell stop. I've answered that question too. I may not be able to attend to all questions today because at least these 2 hours into the session, the recording may be too long for you to watch even after now. But what I'm saying is this: IML provides you the cheapest educational platform. Cheapest educational platform. I may not have time to do this for you every day, but you can actually learn from different traders in the different sessions, even the Spanish class. And another advantage we now have is that we have the recorded version of all the sessions. Any session you miss, go to your back office, click on recordings. You see the chart. Some of the chart I share with you is from the sessions, live sessions. It will help you. Taking trades from the scanner, I answered the question earlier, how to take the trades. But please, you will not be able to be successful in Forex if you are not conscious about the knowledge. The skill set you have today will never be taken away from you. Please try as much as possible to be independent. Try as much as possible to kill emotions. What we avoid, what we miss, what the mistakes we made when we were taught Forex before now, don't make such mistakes again. Place your trades, forget about them, let them run. You have patience for losing trades, have patience for your trades to go positive too. It may consolidate. It's a game of patience. Ensure you play along with major key levels. What we call key levels include supports and resistance. If you are good at drawing trend lines, you can actually take it. These are diagonal supports and resistance still. Maybe any other time from now, we have time. I may like to take you on the 7 components of trading. The only 7 things that matters, 7 things that matters, not everything. Resistance, support, trend line, counter trend line, candlesticks, few other things there. Just very simple, very simple. Please, trading is an art and you have to be perfect through practicing. No matter how long you read about bicycle, no matter how long you Google to read about bicycle, the inventor of bicycle, you will not be a good rider until you start climbing on a bicycle and you will fall. Stand up, climb again, fall, climb again, fall. And if you are a good quitter, the next thing is to avoid trying to ride bicycle in the entire life. But a person that doesn't quit will keep falling and retrying, and with time, I bet you that person will be riding bicycle without holding the steering. Be riding and standing, riding and handing his or her hands on the air, be riding and jumping on the bicycle. That is how an art is being learned. So please try as much as possible to do beyond what we are doing for you. What we are giving you, we are helping you. You want to join our family? Join our family. My business as Alban Global Services was to train people in Forex education, in Forex training education, and you pay me. I manage your portfolio, you pay me. But IML had come. Why not use the services of IML? Because it's cheap. Because me, I will not manage your portfolio less than $10,000 at minimum. I won't. It's purely, it's punishment. Trading any amount less than that. So I don't do it. It's not business-wise. You can trade that one to buy 8 times every month. Just trade $100, buy 8 times next month. We are trading to do something important. People trade and buy land. Apart from keeping this thing privacy, I know some of us here that trade and bought land last month. No people that bought it. We don't trade just for buying 8 times. We are not trading as a for game. It's not a game. We trade it's a big business and a very serious business. If you've not decided to join the act of trading, you stay out. If you want to do it, no solution than to learn. That's all I have. I will not allow this session to go beyond this. Thank you for your time. We will arrange for another one soon, and the video will be available and on our page, Alban's FX Global Services. If you've not been to that page, please be to that page, like the page, so you'll be seeing our updates. Drop the link. Alban's FX Global Services is a registered company with the Corporate Affairs Commission, FX Global Services page on Facebook. Go to that page, like the page. If you can, you can write a review on the page. You can review. I would love to have your review. I thank those of you that I saw you writing review on the page. Something big is cooking. You'll be aware of them soon because we are going into a larger range of African countries and taking Forex Education Day. I want you to be a teacher in Forex. You, not me. I want you to be a teacher. I want people to come to you and you teach them Forex. I will love to attend a training session by you. I will love to be there. I love seeing people post results. I like seeing people just become independent. Try and become a leader. Don't be a learner always. That's my advice to you. And very soon, we are going to meet at the top. Thank you very much for being here today. Bye-bye.
Thank you, sir. Thank you, sir.
Bye-bye, sir.
We appreciate it.
We are working on Trader Summit. Trader Summit. The game, the planning is on. Between now and August, we should be able to own the summit hosted in Lagos State. The committee chairman is now there.
Why not you?
Bye bye.